This is the London FinTech Podcast, bringing you practical insights and approaches, stories and inspiration from the innovators who are building the new world of financial services. Welcome to London FinTech Podcast. Today's conversation is about your financial future, and everybody's really. We're going to try and answer the question of what do future decades look like? How much money do I really have? And what can I afford to do? What happens if I invest or I don't invest? Those sort of questions. How do I even work those answers out, which is really where this conversation starts. And there's something about this discussion today that I'm really looking forward to. I get to talk to global top-tier banks, well-established scale-ups on this show. So we've had firms like Robinhood, SS&C, Bank of America. But today we're going to be talking about the founder's journey from the very beginning, as well as the life-enhancing challenge that the team are solving for their clients. This is a true FinTech kitchen table startup story, bootstrapped from the beginning, if you will. And my guest today is Richard Squire, founder of My Finance Future. Welcome, Richard. It's great to talk to you.
Hi, Tony. Thanks for having me on the podcast.
A pleasure. So, full disclaimer, we know each other a little bit, which is why I'm quite excited about this conversation, because I've seen from perhaps a bit of a distance what you've been doing over recent years to get to the point where you are now with the My Finance Future business. And we're going to talk about the founder journey, but we're also going to talk about the business, of course. And there's something here, I think, for every would-be fintech entrepreneur and perhaps those in more established firms as well. But before we dive into all of that, can you tell us a bit about your background and how you came to be driving what is now an award-winning fintech startup?
Well, Tony, as you know, you mentioned we knew each other. We've both been in management consulting for a long time. I was in management consulting for about 30 years before getting into fintech. So through big consulting, started as a developer, moving into niche consulting in the financial services sector through a couple of startups to trade sales. Very interesting journey. Went through the whole roller coaster ride of the financial crisis. And at the back end of that, I guess I came to a natural exit in the last one of those companies and realized, well, there's more to life, I guess, and there's something at this point in my career, I'd like to try something new. And I did have an idea that had come to me a few years before, and we'll get into all of that, which I felt was something I could pick up at this point. So back in about 2017, 18, I took the decision to move into the fintech sector, not really knowing what I was getting into. I'd been sort of sitting on the side of it as a consultant in the financial services sector, but not really understanding what the ins and outs of running a fintech were. So that was the start of my journey.
There's nothing like getting hands-on. So it's been a journey to date, and I believe a bit of a roller coaster as well, but you don't really know what you've taken on until you get started. I'm sure it's been quite immersive. And so it's when you're not working on the fintech startup / scale up, I guess, at this point. And what do you like to do when you're not at work?
I think this is going to be a little bit boring, actually. I mean, I guess part of the reason I took on the fintech was because it was something I really wanted to do, and it's sort of my hobby as well as the work. So I feel like there's less I need to do outside of work to balance it. I mean, I've got 3 kids who are going through that transition from school through university and out the other side. So I spend a lot of time with them when I'm not doing this stuff. And aside from that, I guess cycling and running and cooking and do crosswords, train the brain, that sort of thing. But nothing big. I mean, the big hobby and the work is all one thing.
But I think the best advice would always be do something that you're passionate about. So at least you've started there. And not every guest on this show is a scuba diving instructor or a horse rider or something. But most folks are just trying to juggle, growing a business with family duties at the same time.
Well, that's right. I mean, for those of you who know the Ikigai wheel, the Japanese Venn diagram of trying to find what you should be doing is valued, all the rest of it. I like to think what I'm doing now with the fintech is pretty close to the center of that. So I get a lot of personal fulfillment out of doing it. And it's a challenge that gives me enough challenge in life. So we'll see what happens next, maybe at some point. But for now, this.
Yeah, and making professional progress as part of that journey. Before we jump right into today's episode, a quick thank you to our sponsor, NextWave. NextWave is an award-winning consultancy that is helping many of the world's leading banks, investment managers and insurers deliver on their growth, efficiency, risk and control goals and transform their businesses. With a senior team who have come from MD level positions in major firms like HSBC, Barclays, and UBS. NextWave has both the deep industry expertise and the hands-on capabilities in AI, data, and automation to drive real results. More business outcomes and less PowerPoint from the consulting experience, as their clients like to say. NextWave has moved 2-week manual processes to 5-minute agentic automations, rescued global banking regulatory control programs, and digitized deal platforms, sustainability, and regulatory reporting systems. And they do much of this with hands-on engineering capabilities on leading technologies, which include ServiceNow, Alteryx, Quantexa, and Camunda. So if a modern and specialist alternative to the big brand consulting model sounds appealing, one which covers the full life cycle of strategy specialists and solutions, but with small practitioner teams, rapid delivery, and a better price point, then perhaps you should talk to NextWave. Visit nxwave.com to find out more and get in touch. That's nxwave.com. All right, let's get back to the episode. As I said in the preamble, I'm really curious about the real nuts and bolts of starting something up from nothing. I've been on that journey on the consulting side, but this is a product firm. It's a SaaS offering. It's a different type of proposition, and you are solving for a very core, life planning, life enhancing challenge. Let's start with that. What is my finance future?
Well, I mean, I guess the idea is that people face big questions, big life questions as they go through the journey, if you like. And when you are facing a big question, often it has financial implications, and it's useful to have an idea of what your whole financial situation, both now and in the future, looks like when you're making a big decision. So you can set it in the full context, so you know what the implications are for your future about decisions you make today. I mean, where we started with this was where the idea originally came from, was actually in the depths of the credit crisis back in 2008. You'll remember this. We'd just been through that. The market for the services that the company I was working for had basically dropped away, and the company that we were part of at that point decided it needed to close down the division we were in, essentially, and we were really looking for the next thing to do. And it meant there was a lot of thinking to do, both personally about career, but also for family and the rest of it. I had 3 kids at the time, one age 4 and 1-year-old twins. I had to make decisions about their education. We're in the process of moving house. There was like loads of moving parts. And so I really didn't have a reference point for those decisions. And I realized what I really needed to help me was a lifetime financial plan. And I spent time over that period building one of those using a spreadsheet, and found it's a real challenge, even for somebody who's been in the financial services industry most of their career, uses spreadsheets day to day as a matter of course, was a programmer at some point. Even with all those relevant skills, it's still a challenge. And the complexities of the tax system, all the rest of it, most people don't understand the details. So you realize that if it's a challenge for me, it'll be a challenge for everybody else. But nonetheless, it doesn't take away the value of having a lifetime financial plan when you make all those decisions. So that's where the idea came from. And I guess that's the problem we're trying to solve.
Yeah, and so important. And I think a lot of folks come to it too late. So that sort of spreadsheet of life, as I like to call it, is often an afterthought, or you'll make an investment based on something your IFA said to you, and you sort of put it in the back of the drawer or leave that for years, if not decades. And then when it becomes really important and it's a changing career or circumstances, or frankly just heading for retirement, it's like, what have I got? And you may have not taken the opportunity to replan, to change your investments, to realize assets, or whatever the things are, tax planning even, along the way. Some really important stuff that often takes second place behind day-to-day career decisions, family, all those things. A lot of people just don't get on the front foot with this because it's so hard to plan.
Well, that's exactly right. It's a really big challenge, and it does take time, and you need to commit time to it. And part of the thing is that people don't have enough confidence to get into the problem because they realize the complexity and they don't know how long it's going to take. It means people don't start because they feel they may not finish. So that's part of the challenge. But the point you made about sort of planning forward, and sort of just investing in your pension through your working life and all those sorts of things, and suddenly getting to a realization point, I've got to do something bigger, which is what happened to me back in 2008. I think of it a lot like, I mean, we've got backgrounds in project and program management from our past sort of lives. I think of it like a project. If you think of your life like a project, when you're running a project, when you start, you sort of work forward. You don't really know when it's going to finish. You might have a deadline. You might have a rough idea of your life expectancy, but you don't think about planning the end. You sort of just move forward through the project, learning more, if you like. And at some point, you get to the stage of the project where you realize, right, now we understand what the rest of it looks like, and we can rework out what that looks like, what the end date will be, what we're going to deliver, all those sorts of things. And at some point in your life, everybody hits that, and it's then that lifetime financial planning becomes real. And I guess for most people, given the levels of financial education we have in this country and generally, I guess, across the world, which is pretty low, people don't have it as an idea in their minds. This is something they might need to do at some point. It sort of gradually builds up on you, like boiling a frog or something like that. You eventually realize, I can't do without this thing now, and I really need it. How do I get it? Many people historically would have, well, I would say many, but some people historically would have gone to financial advisors who can help with that. Given the financial advice gap, it's not something that's available to a lot of people.
Yeah, and to your point, it's the most important project you'll ever do, but it's an afterthought for a lot of people. And I get the education point and the advice gap. Also, there was something you said there, which is the expertise gap. And if you think about it, actually, if I was to open up Excel and start doing my lifetime plan, within 10 minutes, I'm going to hit, well, what happens with tax rates and tax codes and how does that play into the numbers? So straight away you hit a skills gap essentially around being an expert on the options that are in front of you and the different guide rails that you're going to have to follow in your plan.
Well, that's exactly right. And I came to that realization really quickly that it wasn't about spreadsheet skills. It was about really understanding the nuts and bolts of the tax system and how that affects you, and the complexities of pension rules and the rules around contributions and withdrawals and what the constraints are and all the rest of it. That all plays into it. It's a complicated, multifaceted problem where you don't have the knowledge at your fingertips to start with. You have to go out there and find it out for yourself. And part of the rationale for part of the, I suppose, the business case, the value proposition, if you like, for our businesses. Well, why should everybody have to go and research all that stuff? Why shouldn't one company do it for everybody to some extent and learn all those tax rules, understand what the right sorts of assumptions you should make are, which are relevant to everybody, and just bake all that into a product that people can use for themselves and can, have somebody else go and understand what's in the latest budget and update the assumptions and plans and tax rules accordingly. Why should millions of people around the country do that for themselves and have to repeat all that work?
And there's a huge amount of knowledge built into the product. You talked a little bit about the triggers for actually building a financial plan, and there can be stages of life. And on this show, I've spoken to really big investment management firms like Franklin Templeton. They talk a lot about better living through investing. And I think the investment industry is swinging to a more whole of life, a phased approach, and trying to align their products with different stages of life. So, which I think can only be a good thing, rather than defining their customer base just by demographic, but saying what are the life events and how do you do that on a customized basis for you as an individual. What sort of stages of life are your client base at? And are you finding that you're getting people on the front foot with financial plans, in their 20s and 30s, or is it more a later stage thing when people are really starting to focus in on retirement?
Well, I actually think it's relevant to everybody at all stages of life. As you said, I think as part of financial education for young people, I hope it will eventually be something that everybody learns about really early on, thinks about this stuff as they go through the whole of their life journey. But where we've started, because I guess we had to start somewhere and focus on people who would get most value out of this and probably felt the greatest need, we started with focusing on people who are just pre-retirement, thinking about that next stage. Have I got enough money to retire, downshift? Have made the realization that they need a lifetime financial plan, or suspect they do. And also those people just transitioning into retirement, early years, who are trying to work out how they make their life savings fund their whole retirement. How can I withdraw the money from my pension in a tax efficient way? Those types of questions, because there's a huge amount of value to be generated by making really good decisions about that. The difference between making a bad decision about how to withdraw from your pension and making a good one can be tens of thousands or more pounds, depending on how big your pensions are. So it's definitely something that's of value to people, where we thought the focus could be to start with, that might help us build the proposition and build a franchise, if you like. But we've got the aspiration to broaden it out over time to cover every life stage, because there are decision points that it's relevant to at all stages of life.
It's a pretty simple concept, right? As we said, it's the most important project and it's the one that's planning your life. It's a little surprising. Was there not already a solution out there for this beyond just build your own spreadsheet?
Well, I mean, it's quite a complicated answer, I have to say. It's a simple concept, but it's actually quite difficult to execute. I was going to say the MVP, and we might get onto it. The MVP is very big because it's got to be a holistic financial plan. It needs to take into account all of somebody's finances, all the tax rules to be viable. I mean, the challenge is there's been lots of sort of small consumer tools out there. Certainly when we launched, there were sort of bits and pieces everywhere to model very narrow problems and help you make very narrow decisions, point decisions. But there was nothing that covered the whole gamut, if you like. So there were things out there, but not something that could help you with that whole lifetime financial planning as a consumer. Financial advisors, there's financial advice software out there. For many years, financial advisors have had access to very similar sorts of financial planning tools, which are designed for professionals, priced accordingly. And when we started, very difficult to access if you're a consumer. They were outside your price range. They were designed for professionals. You find it difficult to get into using them. So the challenge we were addressing was how to make tools which are sort of already available accessible to the man in the street, and designed so that you get started from scratch without too much in the way of support. So that's the real challenge we're facing. It's almost less a technology challenge and more a design and business model challenge. That's the difference between the software houses that are serving the financial advice sector and what we're trying to do.
Yeah, it's an important point because those tools have been out there with IFAs, but they're generally behind the scenes. But what you're doing is sort of democratizing access to that expertise and planning framework and putting it in the hands of the consumer at a low price point. I think you can, for anyone who, and we'll put this in the show notes, who wants to look at My Finance Future, you can get onto the platform for free. And I think I'm right, Richard, in saying that it's something like £99 or something for a year to open the whole thing up. And there's all sorts of scenario planning and detail available in the full product.
Yeah, so as you say, there's a free version that allows you to get started in finance, find out what financial planning is all about, and then £95 a year for the premium version, which essentially gives you access to something similar to what a financial advisor would provide as part of their service. And I guess the other point is that the tool is yours. So the part of the concept behind the model was to decouple the access to a financial planning tool from the financial advice sector. The financial advice sector offers a lot of value in many ways. However, if you wanted the financial planning part by itself, to do it yourself, that wasn't possible without also buying a lot of other services, which can be quite costly and not appropriate for some people. So, I mean, I remember when we started this, I talked to some of my peers at the time who said, well, I have a financial advisor, but really what I want is that tool. And I'm tied into it because I want access to that tool. And so this gives people a way to just buy the tool, which is suitable for a decent subsector of people who are looking for this requirement.
Yeah, and the planning for years, the planning was bundled with the advisory fees, which were not visible in the fund fees anyway. And then in more recent regulation, they've been unbundled, so you can see what you're paying for. But to your point, I think there's a significant proportion of the audience who really just want to get hands on with the tool and build their own plan.
That's right. And many times you need to make a financial decision without also the need to invest money. I mean, a lot of financial advice services are really designed around investment. So if you've got money to invest, the planning part gets bundled in with that. But if you've got a financial decision to make, but don't have money to invest. And actually, that was my situation back in 2008. I was trying to make some decisions, but I didn't have a huge amount of money I wanted to put into a new investment. So financial advice wasn't really designed for me at that point. So this is more about helping you navigate your journey rather than necessarily a point in time decision around a particular investment.
Yeah. And you used the phrase MVP a minute ago, so minimum viable product. So that's the first iteration of your product that can be commercialized and taken to market. I mean, that's my definition. There might be a dictionary definition that's a variant on that, but it's essentially what stage one of the offer that you can take to market and the tool that you can take to market. Can you talk about what some of the challenges are on building really accessible and useful financial planning tools? Because you also made the comment that there were other tools out there that solve for part of the problem. So I'm curious as well, was this more about bringing feature sets together, or was it more about going really deep on, I'm going to capture every asset that I own, and we'll leave the tax planning bit for stage two? And sort of how did you think about the MVP and the challenges of building the first version of My Finance Future?
Yeah, so I guess we had some basic principles around what a useful tool be. I mean, it's a really good question because this has definitely evolved over time, as you might expect, I guess. And so to start with, the principle was it must cover all of the finances for most people. I guess we're not talking here about the sort of top 1%, 0.1% who might have needs for trusts and more complexity around their finances. But for most people, we need to be able to cover all their finances. Without being able to do that, it's not really a holistic financial planning tool. So that's principle number one. Principle number two is got to be easy to use for somebody who is new to this. So it's got to take away a lot of the research around the assumptions you need to make, what the right assumptions to make are around asset growth rates, tax rates, future tax rates, all those things that you'd have to research for yourself. And part of this was also combining onboarding, so the first journey, which we needed to make smooth to avoid people dropping off or getting frustrated or not reaching the point where they get value out of it, plus the ability to evolve it over time and get more into it. You've got people at various levels of experience in using the planner, but also various levels of experience in financial concepts generally. So how do you create something that supports all those types of people? And I guess we started from the perspective of we're not going to be able to solve for everybody immediately. So we felt that if we could solve for relatively sophisticated users to start with, who would hopefully be advocates for us because they'd understand. We hoped we'd find some people who are really passionate about financial planning and just been waiting to find a tool like this who could give us loads of feedback and help us evolve it. And over time, we'd look to further refine the ease of use challenge, which in some ways is counterintuitive because this is a really complicated problem. So the thing in the middle is really complicated, and what you need to do for increasingly less confident users is make that simpler and simpler and simpler, but without taking the complexity out of it in the middle and allow them to evolve on a journey, because a financial plan created with a very small number of assumptions will have flaws in it. You need to get more into it in order to build something which is genuinely robust, but you can't necessarily do that immediately because you need to build up your financial capability over time. So, and we're still in the middle of that journey. So we've built sort of version 1 to 2, if you like, supporting people who are both very sophisticated and, I suppose, the next step back, people who are confident but maybe on a learning journey. But we know we're still quite some distance from building something which supports everybody, and that's something we're learning about as we go.
Yeah, it's really interesting because what you're describing there is a sort of quite a fat minimum viable product. So a lot of firms, SaaS startups, might start with a very minimal set and focus on a beautiful user experience, and but there's not much behind the facade. Whereas I think you've come at it the other way, where it's an expert model that you are trialing with sophisticated early clients and building a lot of expertise in there. So that's really your moat in terms of the rules that sit in the system and the data model and the functionality. And I know it was complicated because you showed me an early version of the spreadsheet. We tried to do my financial plan. I don't know how many years ago that was, and it was in Excel. It spanned for 20 minutes and then crashed, didn't it? If we remember rightly.
We were really pushing the absolute outer limits of Excel. So that was probably, mean, probably the biggest point of our journey, as we were sort of talking about our journey a little bit, was when we managed to really luckily find a fantastic CTO who was coming out of a really good company who took our spreadsheet, which fortunately we built in a structured way, although we were sort of pushing the envelope on Excel, and he was able to convert that into something using modern technology, which ran in about a second, well, a tenth of a second, I think, was the first thing. And he did that in
Yeah.
about 2 months, which was an amazing achievement. I'll never forget the moment when we for the first time in something about 1,000 times faster than it had been in Excel.
Yeah. The spreadsheet overload, I'm very sad to say, was nothing to do with the number of zeros that I put into my financial plan. It wasn't the size of the assets. It was really encoding all of that complexity that we've been talking about. And that's quite a nice link, actually, to a bit more on the founder's journey. So we talked a lot about the product and the real world problem that you're solving for. But I'd love to talk a bit about the journey to get to where we are today. And if I'm right, this really was kitchen table innovation. So it was like, I've got an idea, and there's millions of people out there who've got ideas, but I always tell people it's 1% inspiration, 99% perspiration, and it's all about what you do about it. So perhaps can you talk us a little bit through sort of phase one, perhaps the first 24 months of the journey? And it has been, I believe, quite a journey, but you've got a great idea, and then what? Who's on your team? What do you do? How do you get started?
Well, where I started was trying to understand the marketplace, what was happening, what the current offers on the market were, just getting to the bottom of where the gap was. And so I went out and talked to financial advisors, a variety of different models, understood what proposition they were operating on, what they could offer me, what was happening in the US, which is often a little bit ahead of us in this space because more people are more familiar with investment in the States. And that was helpful too. And trying to get a handle on where the gap was, and think about the strategy that we'd go through it with, and whether there was any technology out there we could leverage to start with, or whether we'd need to build our own. And I concluded that for what we were doing, because the user experience is so integral to the technology, to try and leverage somebody else's technology was going to be hard. We wouldn't be enough control of the user experience. So it was about biting the bullet and deciding that we had to build something, and it was going to be big because of the size of the MVP. And thankfully, around that time, I was attending a social event, sort of an alumni event for one of the companies I used to work for, and one of my former colleagues. We talked about this proposition, and we just had been thinking about the same thing. We decided this is something we could do together, and actually 2 heads are definitely better than 1 on this sort of thing. So we, at that point, said we were going to do this. And so that was probably early 2018. We spent the next 18 months building that spreadsheet you were talking about. It was that bigger challenge to do, researching all the tax rules to build it into the spreadsheet. And thankfully, after 18 months, just as we were at the point of, okay, so how do we actually take this any further now? We were lucky enough that our CTO came out of what he was doing and was persuaded by the idea and was willing to come on for equity only, and took it from there. And we were able to build the first version of the back end, I suppose, in a couple of months. And then off the back of that, I was lucky enough to persuade another former colleague who was a designer to come on board and design the front end, again for equity only, which took us through the journey to the point where we could start a pilot. We're talking COVID times now, so we were sort of all sitting at home coding away. And at the back end of that, we got to the point where we got enough, sort of 90% of the MVP we'd envisaged, and we could start a friends and family pilot, which we ran for about a year. We added some really important things on around making it the onboarding journey faster and easier to use for new people. And came to the point where, I guess after almost 5 years, we launched the service at the back end of 2023.
Yeah.
So quite a journey.
So you're not going to win a prize for fastest startup. So OpenAI got to 100 million users in 2 months on ChatGPT. So not at that end of the scale, but this has been very considered stage by stage. Sounds like you started with the market research and product market fit. So what is this proposition? Where does it sit in the marketplace? And then quite a systematic process of building out the core and the rule set, and then layering on the UX. And and with that small central team. And it is very much team sport doing this stuff. I mean, it sounds like, founders is often think of it as a singular thing, but I firmly believe you need 2 or 3 people in the tent right at the beginning, because partly you need to bounce ideas. Partly, frankly, it's just lonely sitting there cranking away on your own and not validating your ideas and not being able to celebrate progress and all those things that you need to sort of propel each other forward.
That's definitely the case. I think we would never have got anywhere near this far if it had been any one of us trying to do it. It's absolutely both a combination of mutual support, complementary skill sets, 2, 3 heads are better than one. Nobody can see the whole solution. It's essential. And I guess the other thing is you've got to recognize your blind spots. And the one area we were least confident in was the retail marketing, because it's not something any of us had done before. I'd been B2B my whole career, and it's a very different beast. How do you solve the resale marketing challenge? And so that was the one area we added an advisor who had the right set of skills to help us with that.
Yeah. And I want to dig into that in a minute. I mean, obviously, part of retail marketing is coming on podcasts and things. And those of us who are sort of well into our careers have had to modernize and reinvent ourselves in the world of social media and all those things. And I think we'll come back to that. But from that early phase, I'm just curious, what have you really learned from the founder's journey from that sort of first 5 years? And I imagine it's a very long list, but if you were going to distill a couple of things.
It's interesting. I'm not sure there's one big thing. I think the thing that I guess there's always the confirmation bias and all the rest of it, but keep going was the thing that if you believe in something enough, you believe there's a problem out there to be solved, you can't quite see the way through the journey. Your belief that there is a problem to be solved and that eventually you could be part of the solution can drag you through quite a lot of gotchas. I mean, probably the biggest one for us was not knowing how we'd convert from a spreadsheet into the full technology. And there was some luck. So you do need some luck. The timing worked and all the rest of it. But I think the biggest thing was the belief that there was a problem to be solved, and just keep going, because you will find a way.
I love that. It was a Toy Story character who said, we'll find a way. And it's a Space Ranger guy. But that self-belief is so important. And helpfully in today's social media world, you can actually crowdsource some confidence, if you like, because I mean, I've seen this with the consulting business. I'm sort of propagating the story that there's a swing away from what I call big consulting to specialist consultancies who've got smaller teams and more solution focus. And I've been writing quite a lot about that on LinkedIn, and I put something up last week, and I've had all sorts of people on it validating my position. So, I come away from that going, okay, right, we're onto something here. We're in the right space. You've got access to the rest of the world, perhaps in a way that you wouldn't have had if you've been doing this 10, 15 years ago.
Well, that's right. It's so much easier to validate ideas and get feedback on propositions, MVPs and all the rest of it. I think we probably would have struggled to get this off the ground 10, 15 years ago. You just wouldn't have had the part of the reason probably it didn't happen all that time ago is the sophistication of the crowdsourcing just wasn't available to you in quite the same way as it is today. Yeah. So we're 2 years in post-launch. I guess I'm still learning what stage we're at, because I guess you until you've been through a stage, you don't really know what the next stage quite looks like. So I guess we validated the proposition in that we get some great feedback from customers. We're getting decent levels of renewals, despite the fact we don't auto-renew to try and build trust. And so people are getting value out of the proposition. We get some great feedback. So the biggest challenge we're trying to solve is, how do we access the market, if you like? What's the right channel? What's the right channel that will get our proposition out there and people to trust it and all the rest of it? So we had a big step forward this year. So year one was really, which was 2024, was really about validating the proposition, which it did, but user numbers were relatively low. We didn't really have a proper channel to market. It was just my LinkedIn network and connections on Facebook and that sort of thing. So really just social media, immediate connections, and word of mouth beyond that. But then through a recommendation actually we had from one of our existing customers, they said, why don't you talk to this influencer, the PensionCraft team? So Roman Nakisa at PensionCraft, one of our customers, was also a subscriber to PensionCraft, which is, for those who don't know, one of the bigger UK personal financial planning and personal finance YouTube broadcasters. And so I approached PensionCraft and said, I've been told that some of your subscribers find value in what we're doing, maybe there's the opportunity to collaborate. And it turned out to be a fantastic fit and something the Pension Craft team had been looking for, a personal financial, a design for consumer a cash flow planning tool, because a lot of their users were looking for something like that. And so we did a collaboration, and it's been fantastic and actually driven a big uptick in use this year, both within the pension craft community and beyond. And because that community is relatively sophisticated and interested in personal finance, we've got some really fantastic feedback, which is helping us take the proposition to the next level as well. So really, really value that relationship. So thanks very much to the Pension Craft team for supporting us this year. So I guess that's the stage we're at. So hopefully there are more opportunities like that out there for sort of collaboration to take the product to market with relevant influencers, or maybe different industry bodies or people who are trying to find ways to solve the financial planning problem for their members, if you like. So that's, I guess, something we're experimenting with still.
Love that. That's addressing the how do I do the retail marketing question that you just posed. And it's a very clear example of sort of modernizing in line with the market, because those of us who grew up in the sector before social media and thought that marketing was sort of writing a white paper as an afterthought for the consulting company you were attached to, and we've been grappling with this again with my core business, is how do you get on the front foot in a multi-channel social marketplace. And we've had I think the term is Finfluence. We had a Finfluencer agency on the podcast that I spoke to. That's a thing, as you have discovered, because you are now collaborating with YouTubers to promote the product, right? I'm in some respects a YouTuber now doing this, doing the podcast, and I don't think either of us would have predicted that 5 years ago. So it keeps you young.
Well, that's right, and exactly that. And I was going to say, we've started recording our own videos now. So I guess on a much smaller scale, we're doing something similar, which is again something I wouldn't have predicted 5 years ago. So I guess one of the things that this journey's taught me is a lot of new skills, and creating YouTube videos is one of those skills. Although I wouldn't say I was as expert as you are, Tony, but there's always more to learn.
It's definitely something our kids didn't see coming. And Dad, you're a YouTuber now.
Exactly. My kids don't know whether they're embarrassed or not, or whether it's just another, whether this is an even more embarrassing dad feature. I think
mine are definitely embarrassed, but they're paying attention to the subscriber numbers. And Sam composed the music for this podcast. I've spoken about it before, but I did a royalty deal with him on day one at a penny a download, and then the show started to pop. And on one episode, I owed him £300, so we had to pay out and draw a line under that contract before it got silly.
Very good. Well, I know my daughter, who's very into marketing, is sort of interested in what I'm doing. So I'm trying to persuade her to come and help do some marketing for me next summer in a year off, but we'll see if that happens.
Oh, brilliant. So talk to us just a bit more about that retail marketing approach, though. So you've got a great YouTube collaboration going. I think you're also on accelerator programs, winning awards, things like that. I mean, what do you see as for an aspiring fintech that now starting to hit their stride? What are the, if you like, the guerrilla marketing tactics that you'd recommend?
Well, I mean, I suppose the way we went through it is we were keen to get, with the value of this stuff, there's a huge amount of value in social confirmation around and personal recommendations and all the rest of it. And so we've been trying to just find ways of getting feedback on the proposition and entering competitions where the proposition gets judged and hopefully reaffirmed. So very early on, we were picked up by a personal finance, a financial advisor who's also a personal finance blogger who made a recommendation on his channel. And that was fantastic. It was proper professional confirmation. And we got unsolicited feedback from a lot of customers, which we asked to reuse. So we've used that on our website and on our marketing, because, as I said, with this thing, it's all about confirmation that this thing has value for people in the early days until you've built a brand. That was the early part. And then we entered the Lloyds Bank launch innovation program, which they run annually, and is probably the the sort of the flagship banking incubator in the UK this year and got selected, which was great for us, great experience. And then we entered the Money Age Awards this year in the Innovation in Consumer Finance category and were highly commended by the judging panel, which was, again, fantastic against a very strong shortlist. That is just that. So we're sort of taking opportunities to help build up a reputation for the proposition, and hopefully that stands us in good stead when people come and check us out after discovering what my financial future is from social media or whatever. So that's been the sort of build up so far. So it's a little bit, we're just learning as we go with some basic principles, and trying different things and seeing what sticks to some extent. What is because there's not something in the UK really that is successful in this space that we're copying. So we're sort of finding out as we go.
Yeah. So podcasts, influencers, accelerator programs, awards, active on all of those. And I think that is the playbook for something like this at this stage. And as you say, you'll have to see what sticks and where you get the most traction. I mean, how important do you think brand is versus product? Because we talked a lot about building a really fully formed product, and the last 5 minutes about building awareness out there and social proof. But, where do you see the balance between brand and product in today's market?
Well, I mean, for somebody at our stage, I think product has to come first. You aspire to build a brand because trust is such an important factor in financial services, and especially in the financial advice space, where there's been so many horror stories over time of different problems that were from bad actors. You absolutely want to have trust with the market, if you like, and building that up is so important and difficult, and you don't want to do anything to undermine it. So that's been the key to us is what can we do to make ourselves trusted? Deliver good quality product is step one, essentially. So you've got to deliver a good quality product that does what it says it does and delivers value to people. That's the first step. If you can't do that, you're not in the game. And there's been so many small tools out there that solve part of the problem, and other tools that hope to solve the whole problem but end up not fully delivering. And quite a lot of things which look like financial planning tools end up being lead-ins as marketing lead-ins to broader financial services propositions. So it's a very mixed marketplace. So the product is the key. Until you've got a strong product which delivers value to people, you're not even at the races, and because you can't start building trust until you've got that in place.
Yeah. So solid product leading into trust. Yeah. And this is what I like about your approach, where it's very considered and methodical, and it's just sort of ignoring the hype. And your sort of foundation is deliver on something that is genuinely useful and safe and works and adds value, and the rest will come.
Exactly. I mean, we've known each other for a while. I'm not somebody who's very good at the hype, so so you probably know where that's coming from. But that's absolutely our philosophy. Yeah. Deliver something valuable. Don't promise more than you can deliver. But I mean, the challenge for us now, I think, is to try and get the message out there in a way that maybe feels a little bit uncomfortable for us, because I think there's enough validation of it now that we can start. And we found ourselves doing more of this. We can start shouting from the rooftops a little bit more about it because it is offering value to people. So I guess that's the next stage.
Yeah, and I can definitely affirm there's nobody I sort of trust more than Richard. You can also trust that you will have left no stone unturned in building the rule sets and validating anything that you've built into the product. So I think you've sort of kicked the tires in all directions and really focused on making it genuinely effective. So what's next in the market space, and how does My Finance Future line up? So what's next for you guys?
So looking forward to next year, I mean, we've got I don't want to prejudge it too much because we're going to have our planning session in January, but we've got quite a few things on the agenda. A lot of it's around building out additional capability, which has been identified from our existing users as things they find valuable. I mean, things like back testing plans against historical data and this sort of thing, which help you, especially on the risk side, so you can judge whether your plan's a good plan more easily. And it's also something that makes the planner a tool which people with less financial knowledge can use and have a more straightforward judgment about whether their plan's a good plan or not. So that's sort of a big part of what we hope to get started next year. And there's been a whole bunch of other things that people have asked for, which will hopefully open the planner up to a broader audience, especially people who are maybe slightly less comfortable or confident with their financial capability journey, easier to get started and a sort of slower transition into the more complicated parts of it. We're also working with coaches. So we've been running a pilot for the last 6 months with a group of financial coaches, because we believe that while some people are completely confident with planning their financial future by themselves, there's a whole load of other people that would value support through that journey. And the coaching proposition is a relatively new industry in the UK, but it's been building up over about the last decade, and it's becoming a richer market. And there's a lot of potential synergies between what we offer and what the coaches offer. So we're hoping to collaborate with that market to enable the planner to reach a broader audience.
Yeah, so market expansion and doubling down on the testing and the validation in the platform. And we could talk a bit longer, but we've only got an hour, so I'm going to start to perhaps wrap this up. But we've talked about a sort of 5-year plus journey and all the things that you've had to navigate along the way. And so what's your advice for would-be fintech entrepreneurs, either those who are sitting at the kitchen table with an idea and not sure what to do next, or those who are sitting in corporates and thinking, do you know what, I haven't ticked the startup box yet, I want to go and build something. What would be your advice for those who are, at that decision point at the start?
Very difficult. Everybody's situation's different. And I was thinking about my journey. I think you've got to have enough confidence that the proposition is going to deliver what you need it to support you. Because I guess we've been bootstrapping the whole way through so far. We can only do that because we've been through a whole career. We built up enough resources that we can essentially fund ourselves for some time to do this. And not everybody's in that situation. We're very fortunate from that perspective. If you're not in that situation, then it's a harder call, but I guess it depends on your financial commitments and all the rest of it. So it's an individual decision. But for me, I feel if I hadn't done this, I'd have regressed it. So if you're passionate about something and you believe that you've got some value to add and there's a problem you can solve, and you've got the passion and energy to go after it, then find a way to do it, because it's fulfilling and you'll regret it if you don't. It will be a bumpy journey, but if your energy and interest in solving the problem carry you through, and you've got the resources to do that, wherever that backing comes from, then do it. That would be my steer. But it's very difficult to advise people because it's absolutely an individual decision.
Yeah. And there's a lot of people out there, to your point, who just won't be comfortable unless they've scratched that itch, and you don't know until you try. And it's surprising, in amongst all of the headwinds and the obstacles that you need to navigate, it's surprising how some things fall into place once you get rolling. And so my number one is to sort of just get started. When we started the Next Wave business, I told 3 people I was going to do it, and by the time I'd told 3 people, it became a thing, because I now had 3 people who were expecting me to get on with it. So you sort of almost need to give yourself a shove. And then as soon as you hold your nose and jump off the diving board, then it's sink or swim. So then and things start to take shape.
I think that's absolutely right. That's a very good way of putting it.
Yeah. So, and you're on some accelerator programs, you sit in some mentor groups and networks. Are there other fintechs out there that you admire, that you're sort of looking over and saying, oh, those guys are smashing it. I'd love to be doing a bit of that.
Well, I was reflecting on this, and there's probably a couple I'd point out as fintechs whose journey we've followed, because they're sort of in our space and they're doing good things and they're helping us build confidence that we can follow a journey similar to theirs in some ways. And the first one I'd pick out is actually a US one, which offers a similar sort of service to us, but very focused on the US market. And that's called Boldin. It was until about a year ago called New Retirement. And they're more well established than us, a bit further ahead, but definitely an inspiration. And the other is a UK company, Money Hub, who's more mature than us. They've recently, they've gone through several rounds of funding. They're serving the D2C have been serving the D2C market in a similar sort of space, and they've done a great job of their journey, which has gone through multiple stages over probably the last 15 years. And were a great, in fact, I've had some great advice from some of their alumni over the last year as we went through the Lloyd's program, which was really, really valuable. So I picked Money Hub as well.
Yeah, I love that. As you can always things that you can learn from those around you, but that's sort of you all over, Richard. You're on here to talk about my finance future, and I ask you that question. And you mentioned two of your competitors. Not everyone would do that. Perhaps point me somewhere else. But humble as always, and taking the inputs where you can get them. So credit where credit's due. Just as we draw this to close, and I always ask people what they're reading or listening to. It used to be a sort of what do you read question, but of course everyone's listening now and watching as well. Is there anything on your playlist that you're currently into?
Well, it's not particularly interesting, but the next thing on my list is to read the detailed rules around the budget pension changes, which we've got to implement into the plan. So I'm not recommending that to anybody else. Leave that to us.
Oh, crikey. So we won't link to those in the show notes. So if anyone really wants a Christmas read or is having a trouble sleeping, then you can look them up. But so we're going to leave the My Finance Future team to do the expert review of the new pension rules. Yeah, I think I'll be waiting till they turn up in the app, I think, rather than opening that book.
That's why we're here.
That's why you're here. Okay. So, and if folks want to find out more about you, or how do they get hands on the financial planner?
Just go to myfinancefuture.com and sign up for the free version and find out all about it.
Plan your prosperous future. So, yeah. Well, I hope a few folks do head over there and try it out. I think you've got a fantastic product, and I've really enjoyed the conversation. So, thanks for coming on, Richard.
Great. Thanks very much, Tony. I've really enjoyed it myself, and thanks for inviting me. It's been brilliant.